Hey guys, how's it going? This is Gerald Harris. I'm the creator of the Real Estate Investing Tips for Beginners Facebook group, YouTube channel, all around real estate community, right? So today, what I want to go ahead, I want to talk about defaulted taxes and default tax investing. So this training is from arrears to assets, your guide to defaulted taxes, tax lien auctions, and over-the-counter tax deeds. What I'm going to explain here is the three levels in which investors begin to involve themselves in the overall delinquent tax investing business. So essentially there's three levels, right? Level one is tax defaulted properties. This is essentially where people fall behind on their property taxes. And you can begin to reach out to these individuals who are behind on paying their property taxes. Number two is a tax lien or tax deed auction. Some states are tax lien states, some states are tax deed states, and they have auctions all the time, all around the United States. Okay. And then the third level is something referred to as over-the-counter tax liens and tax deeds. Essentially, what these are properties that have gone to tax lien or tax deed sale, and they go to auction, and for whatever reason, they did not sell. They revert back to the county, and they acquire the status OTC or over the counter, essentially meaning that you can buy these properties now directly from the county. Okay. So, number one, tax defaulted properties. The first way investors can get involved in real estate investing. Now, let me break these down. With tax defaulted properties, essentially what happens is people that fall behind on property taxes, what it's telling a lot of people, specifically investors out there, is hey, they may not want their property. So oftentimes, the way to approach these individuals is the two most popular ways is by a cold call or direct mail. Some people text. Okay. But when you're going after these individuals who have properties that are behind on taxes, what you want to do is focus on people that are 2 years old and older and paying their property taxes. Essentially, year one, we all procrastinate. But if somebody has gone 2+ years and they have not paid their property taxes, they make a good candidate for you to go ahead and reach out to them to essentially acquire and purchase their their properties. Now, you can go ahead and go after whether they have land, houses, or commercial property. All types of properties are on that list. The most motivated oftentimes are the people who don't live at the property and essentially are out of state. In other words, they don't live at that specific property. So if it's a house, they don't live there and they live out of state. These make some of the highest motivated sellers. Now, why do people fall behind in their property taxes? Different reasons, right? It could be aging, lack of income, could be a death that has happened. The property that was somebody had passed away and relatives inherited, and nobody is up to paying property taxes. Nobody knows what to do, how to do, or doesn't want to do. And the list goes on, right? There's so many reasons people fall behind on property taxes. Obviously, the most popular ways you can reach out are cold calling and direct mail. A lot of people text. Now, when it comes to defaulted property taxes, I would say, from my personal experience, focusing specifically and not primary, but specifically on land oftentimes, because land is very unique. It's very different. In other words, the person that is owner of that lot essentially at one point in time had a desire to do something with that lot, but that lot is just sitting there. And the primary expense on that lot, lots of times they have no mortgage on that property. So the primary expense on that lot is property taxes. And people get tired of paying those property taxes, depending on where that lot is located and how expensive those property taxes are. And so paying attention to land could be in your favor as a real estate investor. So this is the first way many investors can go ahead and get involved in this whole delinquent tax investing umbrella. The second way, or the second level, is at tax lien or tax deed auction. Now, some things, some general things, and obviously this is not everything, but some general things you have to understand is there are over 3,000 counties throughout the United States. And every county has a different way to go about doing things. Now, half of the counties in the United States are tax lien areas or tax lien counties. Half of the other half of the counties are tax deed areas. Okay, so some general steps, right, to approach this whole tax lien or tax deed investing process. So obviously you're going to obtain a list of properties. You're going to do your due diligence. Hopefully I spelled that right. Do your due diligence. Obviously you're going to attend the auction, bid on the property, win the property, understand the process. Now, one of the things you want to keep in mind is there's a lot of counties now that have gone online. Some counties you have to continue to attend in person, while other counties you can go ahead and bid from the comfort of your own home. You're going to have to understand that specific county's process. My encouragement to everyone that is listening to this, take the time to go and attend your tax lien or your tax deed auction. It's free just to go ahead and to observe the process your first time around. Okay. Now, the things you want to understand is, what is your end game? What are you looking to do specifically with this particular lot or this particular house or this piece of commercial property? What are you looking to do? What is your end game? Okay. You have to understand redemption period. In other words, if you're dealing with a tax lien and you know that you're dealing with a piece of a single family home in Florida, in some county in Florida, and you know that if you've won a property at a tax lien auction, you understand this. You did not win the property. You won an interest in the property. And you have to know that it's going to take 3 years for you to go ahead and go through the process of foreclosing to gain full ownership of that property. In other words, once you acquire an interest in that property, once you acquire a tax lien certificate, you have to understand that that owner of that property has 36 months or 3 years to go ahead and to pay what you have paid, plus I think that area is either between 16 and 18% interest as well. Tax lien investing is a great way to make a nice return on investment. Okay, you're going to have to understand lien and title issues. You have to understand access, whether that be a house or if it's a piece of land, is that land landlocked? Is there any kind of access to that property? Okay. Competition. There'll be some serious competition at some of these auctions. Now, when it comes to tax liens and tax deeds win over when it comes to ROI. Right? When you're acquiring tax deeds, you're essentially acquiring that property. You're acquiring the deed to that property. In California, you're going to a tax deed auction, tax deeds happen in California, you're going there to go ahead and bid on the property. Right? Now, you have to understand there's some serious competition at this level. I'm going to refer to it as the second level. There's a lot of competition there. Okay. Like I said before, tax liens a great way to make a really good return on investment. And obviously you could attend these auctions online or in person. Now, not every area is online. Many of these areas you're going to have to attend in person. Also, to obtain information from some of these counties is like pulling teeth. So get familiar with the county that you are interested in. Give them a call. Talk to them specifically. Go attend the auction. These things are free. They just take time. So take the time to learn that county's process. If you want to know how to find your tax lien or tax deed list in your area, go to Google for free. Type in tax delinquent list, your city and state, or your county and your state, or tax deed list, or tax defaulted or tax delinquent list. Those properties will pop up in your specific area. A list of properties will pop up in your specific area. Make sure you bookmark that website because they're going to update properties throughout the year. Also, give them a call. Okay? Once you go ahead, you do your search on Google, a phone number and email address is going to pop up. Give them a call. Get to know them. Take the time to know your county or the county that you're interested in investing in. Now, level 3, over-the-counter tax liens and tax deeds. So the third level, the third way investors can get involved in delinquent tax investing. Over-the-counter tax liens and deeds oftentimes can be the least competitive. Actually, it is the least competitive. You buy at the local county. Okay? You must do your research. In other words, you must do your due diligence for that specific property. Most of the properties, when they're offered over the counter or OTC, there's not an auction process. However, every county is different. So get to know their buying process. But oftentimes these properties are just for sale over the counter. You pay what they're asking, you go through their process, have a nice day. And like I said right here, know their process. Now, I will say this up front. Depending on what county you're interested in investing in, every county is different, right? When it comes to over-the-counter tax liens and tax deeds. So some counties want you to actually live at the property. They want you to buy that vacant lot so that you can build up that lot and contribute to obviously the betterment of that community. They want you to buy that house to fix it up so that you can go ahead and live there. In other words, they're interested primarily in owner occupants. That's some counties. Some counties do not care. Get to know what your county wants. Right? There are some phenomenal opportunities at over-the-counter tax liens and tax deeds. Also, there's a lot of properties that don't get bid on for whatever reason. Sometimes the property can come in with too high property taxes. Sometimes the property is a property that you do not want to touch. Sometimes it's a property where one investor or multiple investors do not see an opportunity and then someone comes along and they do. This is a phenomenal opportunity to go ahead and get involved in when you're talking about OTC, tax liens and tax deeds, because these properties are, there's essentially no competition. You just go buy them for the most part. You just go buy the properties. But when you're buying them, understand this, much like I said with the slide before, understand what your end game is. What do you want to do with that property? Okay. What do you want to do? So if you all are interested, have access to over 675 over-the-counter properties available now. If you want to understand and know more, check out the link in the description.